Hey guys, how are you? It's the Market Sniper, and we are back. Yes, we're going to talk about gold, but we're going to talk about visualization of how the system is. Many people are confused. Many people don't understand currencies moving, bond markets moving. It's all these funny parts that it all just becomes a confusing mush. And if they could just have one simple visualization that pulls the entire economic system together for them in terms of how it works, what it means, and then they could just understand. And sometimes it's really just knowing that a lever pulled here is something that goes up there, and one pushed up leads to something else going down somewhere else. In other words, there's this global financial system. And I'm starting here with a first visual, because this in the end is going to start and it's going to end with gold. This is Tavi Costa, who we had on our show a while back. Sound, solid money analyst, and worthy of a follow, by the way, at Tavi Costa. But anyway, what's he talking about? He's highlighting something we've been saying for a while, but he's just put it together in a nice chart, and it's visual and it's clear. So I want to do that on the macro system as well, so that you can all just see something that you can visualize in your mind, and the minute you have an image, it's clear. This works that way, that does that, this goes up, that goes down. What he's actually showing you is pretty clear. And over here in the white chart is China's gold rush. China is running into gold. Yep, that's the white line that I've underlined in the pink. The red line, China's holding of USD treasuries. So let's do it in blue. The red line going like that, and then accelerating down like that. By the way, I need to check the number, don't quote me now, but I'm pretty sure it's over 50 billion. It was 58 billion, I think. Hope it wasn't 38, but 58 billion I seem to recall. This quarter alone that ended, January, February, March, sold treasuries for China, 58 billion. Now that's a massive amount. Of course, that asset class has hardly been doing well. Remember what we said, 2020 in August, this is going to lead to a first and major and only bear call on the debt markets. The 40-year bull is over. You're going to go down, and you will go down harder and faster, and the unwind in the debt system will lead us into a fiat and debt system reset. And it took 40 years in bull market escalation from 1981 gold high, and in much less time, between 4 and 6 years, you will watch that entire rollback of the parabola. What is that parabola? Let's show you another chart that helps clarify. This is the 30-year Treasury Total Return Index since 1919. Quite interesting. 1913, of course, beginning of the Federal Reserve. But the real success of the financialization of everything came between 71 and 81. First of all, in 71, Nixon removed temporarily, what a lie, the ability to convert into gold. And in 81, as a result, gold in that decade that followed 71, following the excessive overspend, the blanket bombing of Vietnam, the complete faraway war that nobody saw, that was absolutely futile, pointless, and utterly military-industrial complex blow-off wasteful. So much money was stolen, so many bungs, so many bombs dropped, so many pointless lives lost. Chemical warfare in Agent Orange was used, flamethrowers, every Geneva Convention that could be violated was violated. You name it, it happened, and you paid for it. And that was 81. The gold resulting bull market peaked in 81, roughly around there. From when gold was successfully suppressed. So from when gold was successfully suppressed, roughly in 81 onwards, we had the financialization of everything right into globalization, workshopping everything in China, Indonesia, Philippines, India, etc. So what you get is a hyper valuation in the very debt instrument that is now the super safe. By the way, the Saudis petrodollar deal was done 1974 with no less than Henry Kissinger. Of course, Henry Kissinger was nearby Nixon when he did the removal of the dollar window. I mean, this was peak Kissinger era, by the way, just if you have any doubts. He also went with Nixon to China, which was the beginning of the great globalization. This was peak Kissinger. He eventually was put forward in 2001 to be the September 9/11 overseeing force of the investigation over there. But this was his peak era. The 70s, early 80s, the dollar window, the gold window being closed on the dollar, the visiting China and opening the doors, bring them into trade. Don't forget, they were communists through the chosen one advisors that were in there, the same ones that brought communism to Russia. That's right. Most people don't know that communism was seeded by all the same people. Anyway, this hyper-financialization period is the absolute parabola, and you can see from whence it started, roughly from whence gold started to pull back right the way through. In fact, gold only started to come back, stopped going down, hit its lows in and around the 2000 end of the dot-com boom, and then it started to get a bit more interest again after the subprime collapse. That was around about 08, 09. But mild interest. We had a truncated bull move from 08, 09 into 2011 that got stamped on in 2011, and you had peak bonds in July 2020. In August, we called that high. We said that is it. It doesn't go any further. You finish with a melt up. We had a ascending, inverted, first in a new trend. Expect hyper overperformance to the downside. And what you actually have right here, right now, is a 45% correction in a long-term US Treasury bill from its high water mark. A 45% correction. That, I tell you, has only really just started. And the great unwind will continue to the downside, ending in an interest rate spike. An interest rate spike that will see capitulation down right to the levels, it wouldn't shock me to see, in and around the levels prior to the gold hypervaluation, right down to somewhere there. You see, friends, US government and military back behind it made the treasuries a risk-free investment. I did an MBA, and every entrepreneurial endeavor you saw that gave a rate of return, it had to beat the hurdle rate, and that hurdle rate was a 10-year treasury, because that was a risk-free guaranteed return. If your business was not going to yield more than a treasury, why do the business? Do nothing, sit on your backside, and put all the capital into a 10-year treasury bill, which has zero risk of failure. Wow. Hasn't the world changed? That zero risk of failure now, as we are entering the reset period, and boy, oh boy, it's already begun for all those that keep always asking when reset. Boy, oh boy, is it so deeply already begun. And the debt unwind is well on its way, and further of it to come. By the way, newsflash, Ray Dalio recently stating on publicly, and kind of a mainstream media, big Wall Street type guy, concerned about the lack of demand for American debt and bond instruments. Yes, indeed, no bid at all. Debt has turned, and the Chinese know it, they're selling. The Chinese know it, and they're selling, and they don't want to be the bag holder, and they're buying gold. They are buying gold with it. So with that understood, understand why we were short TLT, the massive long-term ETF of debt, and why we think it will still go down further, and in actual fact on an interest rate super spike, which will be required to try seduce people into buying debt instruments because they are not attractive enough right now. And because of the expenditure that Yellen is doing, a better part of $1 trillion every 100 days, soon to become $1 trillion every 90 days. So every 3 months, you'll be adding $1 trillion to your debt Most of it is not funded by tax in an environment where the average man in the street is absolutely not having a great old time. His electricity's gone up, his petrol has gone up, his gas, as they say, his mortgage payments have gone up. He can't afford to sell his house because you'd have to get a new mortgage on a new property at a much higher rate. Jobs are being cut in most of the retail and consumer space, unless, of course, you're in the military industrial complex, a pharmaceutical industrial complex, media, propaganda industrial complex. Then you're doing just dandy and fine, as government is giving money to the likes of Israel and Ukraine to expend on buying weapons, capturing media, and pharmaceuticals for the masses as well. Anyway, so going back to the framing of the great situation we are in. Let's start with the US dollar. So a little bit of an image that I thought would help. So what has America done? They have let their debt markets fall, and they have led the journey to the upside on interest rates. The fat boy is underwater. By the way, the water level in that fishbowl is climbing. This is the American financial portion of the economic model. Treasury is collapsing. You just saw the chart of the 30-year, 45% down, deeply underwater. They are allowing the mass contraction that is happening to fiat and debt to predominantly, at the moment, happen to the debt side of their seesaw. By leading the rate charge to the upside, their currency, relative to other currencies, is firmer. Most currencies, not all of them either, but relative to most currencies is broadly firmer. And their debt is devaluing. So that's how that chart looks. And when you get the dollar milkshake theory guys, they're super proud of dollar strength, woohoo, dollar strength. We are beating up everybody else. Our currency, good. And they look at one half of the fishbowl. And here they are winners in their world. But what they don't highlight is that in actual fact, their debt market is the weakest of them all, for the fact that the rates have gone up the most, and as a result, the devaluation in the debt is the highest. And why? Because they have to do it. Less people want the debt, less people buying. They have to make it cheaper and make it offer a higher yield. If you make it cheaper to get in and it's paying a better yield, then people contemplate still putting a bid under it. In short, the US Treasury markets is debt value down due to the rates up and lack of bid. And Ray Dalio even confirms recently what we said 4 years ago. You're going to end up in a lack of bid for the debt markets. It's going to continue to get worse at an ever escalating rate as the normal curve realizes what we realized 4 years ago. The debt markets are wrecked. Now, on that previous chart which showed the parabola and the 45% correction, Bank of America amazingly forecasts they see a great return for the debt markets, and from here it's going to go up. Unfortunately, no, because the biggest buyers are the likes of China and foreign national governments, not you and I. We are not shuffling over to the ATM and making a purchase of a 10-year treasury bill. The biggest purchase are pension funds and international governments who are recycling trade surpluses that they have sold more goods to America, someone like China, someone like India, potentially, or other nations that are running trade surpluses, particularly with the US, and they are recycling them into treasuries. That's what they used to do. That was the basis of the petrodollar, with the deal that was done in 1974 with Henry Kissinger and the then Saudi king. You support our dollar by buying our debt instruments that pay you a yield. And of course, they were led into a bull market. Wasn't a bad deal for the time until it ends, until the expenditure, since the Treasury seems to have merged, or the Fed has merged into the Treasury. I don't know who's become who, but Drunken Sailor Granny Yoda Yellen is spending it like no tomorrows. And we've always got money for Israel and Ukraine, which is Upper Israel by de facto, of course, for armaments and for a little bit of light money laundering for the insider cartel. Anyway, so that's how you should focus on your overall fishbowl, to talk about the dollar and not to talk about the debt instrument that was created when you borrowed it into existence, is like talking about the shadow and not paying any attention to the obstacle that is creating the shadow. They go hand in hand in a T-bill accounting world. So let's have a look at the Japanese, because they're a polar opposite. You see, in this one, the fat guy is on the currency side. So Japan, many aged citizens who've purchased, housewives, many have purchased plenty of the debt, they have maintained their rates very much and only done a very small 0. Whatever cut. So their treasuries relative to American treasuries have retained, in an artificial sense, all these markets are manipulated to varying degrees, have retained their relative value in comparison to American debt. So the skinny guy is sitting on the Japanese JGB treasury side, and the place that's taking the loss is of course the yen, because if you have anything invested in Japan in treasuries there, you get paid a poor yield. You will, as a macro hedge fund manager that can be globally anywhere, you will go, you know what, I'd prefer a better yield in a risky debt market. If I have to be in treasuries, and some funds are bond funds and have to be in treasuries, some pensions have in their remit a minimum amount of treasuries to be not risky because equity is so dangerous, like, well, they have to be buyers. They will sell those Japanese treasuries because they'll say they're artificially being maintained at too high a level. Mr. Skinny Guy here, that is above the waterline. Both have high waterlines in their tanks because their fish tanks are highly indebted nations, represent highly indebted nations in terms of money that is borrowed into existence. So the yen is taking the kicking and is underwater. So both are contracting. However, they are allowing the contractions at different states to take place in different parts of their markets. And at the moment, the Japanese are letting their currency slide and slip. By the way, you had an interesting pension crisis in the UK. And what tends to happen is the water level continues to go up. You get the entire windmill effect when you are not raising rates as much as America. The international fund managers and global macro are selling your debt instruments, which means they also sell your currency and move the investment funds offshore, say to America, to have dollars that are firming and have US debt that's paying a higher yield. What ends up happening with your already high debt levels, they continue to get filled higher. Why? Because Truss and Kwasi Kwarteng decided we're going to not increase taxes. We want a stimulus budget to try get the economy going again. And in other words, we're not even going to come close to balancing books. We're going to run an even bigger deficit. So the supply of debt is going to get ever higher. The market suddenly go, hold on, that water level's going higher. And we're going to get out of your debt. And what ends up happening is both the currency and the debt goes down. You go whirlwinding around and you have chaos in your market. And the net effect of that is that your currency and your debt eventually go down, crash. We had a microcosm of this. Of course, the Bank of England intervened when it was cracking and re-propped the two back up. It says, we stand behind it. We fired that Prime Minister. We fired that Chancellor. And back to, less debt and more tax, etc., etc. So you're going back to a tax and spend instead of a stimulate and spend budget, which saw a crisis occur when both the pound went down and there was no bid for its debt. You ended up with both people falling into the deep end of a very high indebtedness pole, and now they've thankfully short term corrected that, rebuilt it after a wave of unconfidence. Remember, or lack of confidence in the British system. Remember, however, it's not in the interest of all the other fish bowls that one major nation seesaw snaps before they're all ready to snap, because that causes contagion. Think of Lehman Brothers, during Goldman Sachs, Merrill Lynch, and all the others that got put under pressure once that bank was having liquidity issues. It creates a great problem, and everybody starts to run out of all banks and all countries' debt. And what does that do? Where do they go? Well, you saw where China's going. Back to the physical. You see, a bar of gold never declares bankruptcy on you. It never turns to dust. It always stays what it always was and will be in the future. Okay, so that diagram hopefully helping put a little bit of color into this. I'm going to also show you how I think overall it goes. One of my guys were just highlighting, in terms of currencies, you almost have the world currency being the sun, being the dollar, and you have, you know, various planets that are a little close to the sun and kind of small. I put the Turkish lira. The Japanese yen is not small, but it's in trouble, and it's quite clear they're going to have a weak yen policy, and they're going to prefer to sustain their debt markets over their currency markets until the moment where the seesaw snaps and both go down. Remember, there is no obstacle, there is no shadow. You can't look at the shadow without recognizing the obstacle. Take away one, you take away both. So in the end, whichever one you choose to let go first, you will, in the end, in collapse, both will fall, and that'll be the snapping of the seesaw. Japanese yen, Korean won, let's put a South African rand in there, an emerging nation like the Turkish lira, the British pound, say, the euro, and then you have the Swiss franc, maybe the Singapore dollar, for example, slightly better currencies further away from the heat of the sun. The way the currencies fail will in fact be when the sun, a star, burns itself out in a fireball and starts consuming the closest and weakest of the planets, such as the lira over here. And here we continue to see it go supernova. It's expanding. Remember, all this time, however, this doesn't make the dollar a great investment. Unlike those of the milkshake theory, this is a relative valuation to other failing, weak, contracting currencies. In short, all those fish bowls of all those nations that I was showing you originally, and let's just go back to that, are failing already. As a wee reminder, your buying power of a single dollar, when measured to gold, has in fact fallen 97% since the creation of the Federal Reserve. So forget phrases such as strong dollar. Strong relative to what? Other failing currencies, maybe. Strong relative to gold, absolutely not. Strong relative to even a grain of wheat, for what you used to pay for it, and the standardized nature of a grain of wheat compared to today's grain of wheat, exactly the same. It is significantly more expensive, even on a technologically deflationary farming product such as bales of wheat. By the way, in the last 4 years, you've dropped 45% on the debt. So what you actually see and what you are experiencing, even in the strong dollar world, where you are in America, 50% of our followers are American. We're really glad to have you, by the way. This is not an insult on you. We love you as people. You're awesome. You're the parasitic managers of the proliferation system in your nation state are doing this to you, as are the parasitic elements in all the other nation states doing it unto them. So what you are having is actually a devaluing, contracting fiat and debt system. And whilst I've shown it as broken, it hasn't fully snapped yet. It's flexed so that both the skinny guy and the fat guy are underneath an ever increasing level of water. 97% down in 111 years, 45% down in your debt market, and we just measured that in the last 4 years from its high. As we go back to our supernova calls for the sun, it starts consuming the others. So this is very much a relative consumption, expands into a supernova sun that eventually blows off and collapses in on itself, consuming and causing a primary crisis in the currency. So as the rates spike, because of the lack of bid under the debt market, they have to spike, but then eventually people start saying, we've gone from a zero risk of collapse to a mathematical certainty of collapse. What yield will you demand for something that's going to consume and destroy all your capital? Well, personally, I'm not going to risk that game. And I think most people, when you're seeing the contraction and the disinflation that a collapsing star actually will bring, as we're illustrating, is in fact not a very cool place to be. And most people are risk averse. They will rather hold the gold bar that will continue to retain its value in whatever monkey money of the moment is. And that is where everyone is going to house their balance sheet. Until eventually this full explosion takes place, the currencies will collapse under the pressure of the rate spikes that will be led through the dollar, a complete lack of bid for debt. No pension will continue to buy. Even those that are remitted to, they'll say, well, we're going to be bankrupting our pension. We're going to all become ward of state. You have to meet our obligations to the citizens. You sold us this debt instrument and now it has collapsed in valuation, which was what was happening in the UK in that microcosm moment. Nobody wanted a bid for the debt. They weren't even supposed to be selling the debt. They were supposed to be paying their pensions out of the yield from the debt. Too many people, not enough yield. They had to sell some of the capital and nobody wanted to buy too big a sell in the order stack. And if they chased down to fill that order, they would have forced a contagion, a pension fund needing the ability to distribute pension payments to its own liabilities, pensioners, couldn't make it happen and were aware that if they chased the ladder down, they would cause a collapse, and that mark to market would have revalued all their remaining debt at a much lower level and instantly been bankrupted. So they said, Mr. Government, nobody wants to buy that stuff that you've been selling us. That's where it is. This is new financial system 2.0, and there's two parts to it. It's the world the chosen ones want you in, the UBI, CBDC, social credit, digital ID, tokenization, surveillance, finance, communistic dystopia that sees them as lord and master over the peasants. And the place I'm suggesting you should be, metals, commodities, unencumbered productive land that generates agricultural outputs. Expect, though, other people who bought land with debt for the value to drop, but the usage and the harvest eventually to go up and up in value until it recovers. Named share certificates, ergo the great taking. If it's not in your name, you don't own it. So there's a couple of the eventual outcomes that we see in terms of the dollar destroying everything. But will it be king? Will it truly be king? So let's have a look at the financial system. And while we're looking at this collapsing event, how it looks. So if we bring up this diagram, there's your collection. You've got the South African rand there with their debt seesaw. You've got the dollar that's strong versus most currencies with the drowning fat guy on the debt side. You've got it the other way around on the Japanese. That bag, fiat debt, paper, digital universe is end of life. It's a Ponzi scheme. It's end of life, and it is contracting. You have the physical universe, metals, commodities, unencumbered land, those other things that will continue to retain their value, that you should be an owner and holder thereof, and their value in peanut money and monkey money will go ever higher until there's a new basis for comparison. That's what's happening. I highlight to you that fiat debt paper digital universe is in a state of absolute contraction. And those are the arrows. And there are the rescue slides, those Boeing 747s. And one of them is wanting to take you from one failing captured system into a brand new similar one that has digital elements and more technological aspects, full-on surveillance finance, biometrics, and many other things. Financial System 2.0. The other one is the only escape that's truly logical. That is precious metals, the monetary metals, starting first with the likes of gold, which ran first, that broke all our capping descending grind lines, broke the 2000 first, made new highs first, then the subsequent following of silver, and so we will trickle down until silver eventually makes a new high, goes and revisits the 45-50 zone again, and you will eventually start to see the miner participation to a higher degree than they have so far. Those are your two options. Which one do you choose? Well, I'll go to this particular image because I like the avalanche example. But that debt collapse that was warned about in August 2020, about 2 years before the next analyst and 4 years from roughly today, you've seen a 45% collapse, and it is an absolute collapse. Unfortunately, you don't stop the avalanche 55% down the mountain. It's not stopping. It doesn't get stopped. It grows bigger, it grows faster, it grows harder, and it roars down into the valley, and the village does get crushed, friends. The village doesn't get crushed. Don't say, I'll stand back, I'll stay here and fight. End of empire for a major nation is not a great place to be. Ask the British after World War II with the Marshall Plan and the austerity and the sick man of Europe for all through the 60s, 70s, the austerity of the 40s and 50s, until literally Thatcher. Ask them about how it went. And this will be worse, bigger, and more globalized. I can warn you. And the West is not the place to be. And so we go to next. This continual contraction, and there's two pipes into the financial 2.0 system. The money launderers, the military industrial complex, the dark state, everyone based in Switzerland that wears a spook hat, and others that wear funny small hats, big corporate insiders, they have a fat pipe into the financial system 2.0, and they probably know quite well which ones are going to be doing that well. And as you can see, all the little seesaws are breaking, and the American one is probably last to break, but all the little seesaws are breaking, and all the water fish bowls are super high, because the more you're in trouble, the more you have to borrow because you can't meet your bills, and the more public finances are a mess. So they're contracting, and where does all the pressurized air go out of that bladder? It goes the fat pipe through the high end, with all the insiders getting big loot into all the positions that will serve them well in the financial system 2.0. What's happening to the little man in the street? He gets a long, old, very thin pipe for minor dollars. Joe Schmo, as I've called him, he gets taxed, he gets stagflated against, and it's very limited how much you get to carry. You'll get bank collapses, loss of funds, counterparty rug pulls in crypto, in banks, in stockbrokers, the great taking, you name it. And then you're going to get taxed and taxed and taxed. And as you are stagflating and barely getting by, you're going to get the likes of Trudeau saying, hey, 66% capital gains above 250,000. And you think 250,000 is a big number, they're going to print more, they're going to do more debt, until that number doesn't even sound like a half decent number on any Monday or Tuesday. In other words, everything you make will eventually be one for you, two for government. One for you, two for government. By the way, it's not really a capital gains, it's theft, because they've devalued the money so much in a compounding way over the last 3, 4, 5 years that actually it costs twice as much to live, it costs twice as much to go on a holiday, it costs twice as much to fill your car, it costs twice as much to do absolutely anything. And now your limit on capital gains tax hasn't moved at all, and you are bracket creep ever into deeper tax, marginal tax zones and capital gains tax zones. And what you're being told is a capital gain isn't even a capital gain. you're actually down on your buying power, courtesy of your government and inflation. Stagflation is an impoverishment tool of the upper middle classes, working poor, and unemployed. And it is an absolute rainmaker, billionaire blessing for all the billionaires who own assets, borrowed real cheap, get their debt deflated away to nothing, pay back in monkey money while holding huge assets that generate big fat incomes that are now going up because of the inflation side. It is absolutely a Gini curve hollowing out event. It is the maximization of the insider cartel, the parasitic entity that runs every nation and has penetrated every single nation with their tertiary extraction and their scammy methods. That's right. And the one out you have is get into your metals and commodities, your unencumbered land, get your share certificates named in your name, get into the physical universe and stay out. Get out of this contracting bladder that is going to end when they finally have a major capitulation. But let me tell you, it goes slowly at first, it starts and accelerate, and then happens very, very fast. And the point of very, very fast is not very far away at all. So if we continue moving, what goes on next? Well, the problem for us in the metals game, our bladder has now been made so small, most of the money has been pumped into financial system 2.0, the great tentacles of financial system 2.0 will not want you to escape, because now your metals, commodities have done well. You could face similar capital gain taxes on your metals and other things, which have actually just retained value in a peanut money system that is in a state of collapse. And of course, the great danger word here, that is tokenization, made popular by yours truly, lol Finkelstein, lols, who runs BlackRock, who's also just backed the new Jewish president of Mexico. Isn't that interesting? A Roman Catholic nation with 0.046% Jews. You now have a Jewish and an Argentine, clearly a Zio as well. Isn't it fascinating, the politics? And good old Larry, lols, is going to come and bring tokenization, because that's what he's truly passionate about. You see, your house, your car, everything you buy, in future, he's going to want at point of sale an NFT stroke token for it to be registered. And that is then visible on blockchain, so he can know everything you own. By person can search, and every asset you own you'll be forced to register to comply. Otherwise, that good will become a black market item. In other words, you'll be criminal for not telling them everything about your wealth and all that you've been able to go. And then they can print up tokens inside their digital puniverse that they've created. And with those same octopus tentacles, buy all your metals off you, buy your home out and turn you into a tenant in your own home. You will own nothing and be pharmaceutically induced into some cryptic state of supposed happiness on your morphine opium, because they love to sell it. As you know from Purdue Pharmaceuticals, that of course brought the fentanyl and brought the antidepressants to the Midwestern farm boys, and somehow didn't go to jail for becoming further bigger billionaires for actually saying it's the least addictive while making it the biggest slice of morphine opiate addiction that you could possibly get. Don't forget, they were the original opium sellers in the Chinese wars. That's right, the banker cartels inside of Britain in the opium wars that sent other people's sons to go die from that country so that they could secure their market. Because once again, the Chinese bought not your crummy items and had such beautiful silks and Ming vases and such detailed work that you all sought to buy. Well, we'll sell them drugs, turn their daughters into prostitutes and their men into beggars. That's what we did. That's what we know. We want an addict for a client, and we'll extract until we are rich and rich as can be. That is the way of the world, my friend. Physical universe right there explained. You're going to have to resist tokenization. You have to resist the taking away of cash. Complain to businesses that say, we do card only, we don't do cash transactions. Complain to anybody who wants to register an NFT against any purchase that you make. Complain against and resist tokenization. Remember how the green lie has been exposed, and we've been able to slow it down as the truth about the cobalt subsistence mines in Africa, the burning Teslas that barbecue your best mate in his car, and all the other surveillance battery give you a nice colon rectal cancer, especially if you had the you-know-what in March 2020 in your shoulder, and now you're sitting on a massive EMF battery doing long-distance driving. Good luck, good luck. We want to push back against all these social impediments, and you can certainly slow them down. They are being exposed for their ESG green agenda. They're no longer so dominant as the truth has been getting out on that same thing that we called and told you to stay out of before that was even announced that such a thing would come. Yes, you know what I'm referring to. So with all that said and done, let us give you a moment, I suppose, of almost humor here. I need my give it back to me. There we go. I need my thing to move. Here we go. A sunken Spanish news alert. Sunken Spanish gold treasure. This is Spanish, those evil Spaniards, the conquistadors. They were so brutal. They stole. They were slave majors. Found near Spanish ship, were actually owned by a Jewish slave trader and belongs to Israel, the ancestor says. You see, now this is an amazing dilemma, because here you either admit that you were behind the primary slave trade, that you visited on nation states such as Spain and Portugal, and in the case of the Opium Wars, Britain and everything else. You either admit that you were behind it, you as chosen ones, or you can't claim the lost gold. 17 billion in gold. So you break cover because you want your gold that's been sitting on the bottom of the ocean, your illicit gains from plunder, slavery, that was initially nation state blamed on the Spanish during the conquistadors, or you admit that you are the great slave trader of the world. And what is the asset that hasn't got old on the bottom of that ocean? What is the asset that has gone up in value, that's been the hodl of all hodls for the better part of I don't know how many 100 years? That's right, friends. It is gold. It is gold. Pure gold. So let's have a look at the charts. So over here, the silver futures, let's have a look at gold first, and let's get a little bit more real estate. Gold settles 1.02% higher. That's just on a day, friends. We told you many times about the 3 visits to the 2000. On the monthly time frame, you couldn't close at a monthly level above the 2K level. However, 3 times, and 4th time a lady, and on the monthly time frame you did in fact close quite strongly, and then it became support. That support turned into a continuation pattern that broke to the upside. Beautiful HVF. We traded that long, smashed it to the upside better than most people expected. Real overperformance, only some sign of exhaustion with a marginally higher high here now. So we're going to square up for a while, I think, in this range. We're going to consolidate in the sort of 2,250 to the 2,450 range, consolidate a bit more before going further higher and upward to the upside. That's right, further higher and upward to the upside. That could see the eventual takeout of the 2,900. I think there will be some resistance to gold, the canary in the gold mine, running through the next 3K level before that happens. So we'll have a pause and a rest. In fact, we are in one right now. I think you're going to drift up a little bit, but we could churn a little bit in this range for quite a while. You've got to remember, on the 12th of February 24, you traded as low as 1984, and before you knew it, by April, the 8th of April, so mid-February to just the beginning, the first week of April, you had already traded as high as 2,400, 1980 to 2,400. Major adjustment to the upside. So I think we drift a little higher, but then we turn around. We need to wind up a little bit, but further higher levels will fall. Further higher levels will indeed fall. That's right. And these levels we've covered before in other videos. 6,485, so the 6.5 will be a major one, and 7,835. But it's not the same dollar, it is the same gold. It's not the same dollar, but it will be the same gold. So when you look at the bigger time frames, you can see those selling wicks twice there. You could expect a little bit of drift up and maybe another sell-off again before you move to the upside. What about silver? Silver, again, nice little hammer today. Nice little hammer, not the biggest hammer, but a bit of a rebuttal of a rejection. Typical. Final day, Friday, the 31st, you guessed it, the 31st of May. Pretty much sure it was the 31st. Was it the 31st or was it, yeah, 28th of May. Maybe it was the weekend that it turned to June. The last trading day of May, and what did you get? 28th of May, major slam down after a rally to the upside. That's on the weekly. So you traded all the way up and you got smashed mostly on the Friday date. You can see it. These two over here, Thursday and Friday, brought you quite strongly down. We did drift a little lower, but we're starting to get a hammer here on the daily. Again, I would expect us to drift in a little bit back into this range for a while. So good move from silver. How did it... let's go back to the bigger time frame and just remind you how it broke the key levels. I didn't have the lines up. We've shown you before the red line, the key breakout over here that came in. Quite a lot of detail there. Let me just take that off. Some of it is unnecessary. Quite a bit. Break there. Big move. Ran the previous high with the Wall Street bets pump with that candle over there. And now it feels like this is potentially a zone of support. So the 29 through to the 32 is going to now turn into a zone of support for me. That's how I draw it. Pretty much like that. 27, we now check that, a box zone. There's been resistance for an extended period and was also a point of interest even before that on the monthly chart, by the way. It's quite interesting. Let's take that box off again and put him back on now. You can see it right here. The base of that descending triangle was the top of the resistance. And that was a continuation pattern. We broke here. We told you when it happened that it was significant, even though it was well below previous highs. And again, we got above important levels. That was the 26. That was the low end of the resistance here. And now you got through the high end of that base that was part of the descending triangle, and also the Wall Street bets high and the 2011, my apologies, the 2020 high that was associated with gold. So this is real progress for silver. I've shown you silver on the CPI to point out that it's really early doors right now. We've also told you about IRA. So we'll show you one minor, and then I will conclude this by saying to you, there is only one conclusion you can come to, good friends, and that is it's time. It is time. It is time for you to get physical precious metals. In the links below, you will find pure gold for international, anywhere, UK based, and we have also introduced for our US guys who like to buy from a US provider, we have also introduced ITM, who will sell you gold and silver. Very solid, long-standing, multi-generational crowd, family business that has been going for many, many years, and will provide you gold and silver if you prefer to have it delivered from a local US source for the American side. So check out those links below. Everyone should be buying precious metals. The Chinese have told their citizens to do it. They've even started to tell them to start buying silver. Now it's your turn. Your government will not tell you. They want you to buy T-bills. They want you to put money in a pension that will buy T-bills. They would really like that because they're very happy with you being a bag holder on their great rug pool that will render you worthless and a member of a welfare state needing UBI and being completely compliant peasant to the overlording requirements, where they can practice their medical variations on supposed cures to remedies and problems that they created themselves. Until I catch you later, you can also book a call to join our community during the course of this week, building wealth. And this is so important, guys. You've got to build, but you've got to preserve. You've got to preserve and build wealth during this time, and gold and silver is a big part of that. It's not the only aspect of it. You've got to prevent yourself from being excessively taxed. Multiple 5-flag theory, etc. should be put in place. All these things and more, plus learning the value of technical charting for you to get those upside targets. By the way, my supreme IRA upside target is $145, and this is only at 14 right now, 14.79. That could be your first 10-bagger equity. You will be stripped of your certificates if you do not have them named in your name in the great counterparty collapse that they have planned for you. All forms of real anger creating ripoffs are awaiting those that do not plan. Please be warned. The precious metals are important. Equities there will be important, and they can serve you well in that space, providing you are the holder. Until I talk to you next time, book a call on the link below. Support the channel by utilizing our very well sourced that I will be using personally and am using personally myself in terms of opening accounts, purchasing gold and silver, both from states, inside states for stateside delivery, to pure gold anywhere in the world delivery. Go ahead and support the channel by doing that. We appreciate you. Thanks for watching. I hope those diagrams work. Give us your feedback. Does the visualization, because it took some work from the team to pull these images together, does the visualization of the system help you understand? Leave us a comment. Does that help you understand the way of the world and how it looks? I'm very visual. I understand it. Draw me a picture is my key thing. I don't understand much. Draw me a picture, then I get it. I hope that drawing a picture has helped you. Let us know in the comments if that works. Till next time, catch you later. Thanks very much, and bye-bye.